there's a lot of different places we can go to find people. This community is obviously a big one. But yeah, I think that's kind of the biggest thing about it.
Okay, let's talk about that in greater detail. I'm going to do my little whiteboard here. So James, explain to me the process as you see it for how the kind of filling a webinar works. Walk me through it in your own words.
So I think it's, so number one, scheduling it.
Okay.
And then the next part becomes marketing it.
Recording in progress.
The word out that you're doing it.
Okay. What else? Give me all the different synergistic problems that you can think of. All the different related problems. So we got scheduling webinar. Now we got marketing. Now what? So what are the challenges in those things?
So the challenges, I guess, I don't think there's much challenge in scheduling. That's very basic, but marketing it is just how do you get the right people there?
Okay. So we
So
call it getting, who are the right people?
The right people, I think the ideal avatar is somebody that has experience, maybe like an accredited investor. They have the money, they have maybe the experience doing this already. And they don't take a lot of education. It's really just, okay, does this deal make sense? Do I trust this person? Do I like this person?
Okay. So not much education required. What else?
So that's kind of like I'd say like the top, the top target. The next group would be people that require a little bit of education.
Which are called what? Unaccredited?
Yeah. Or people that are maybe unfamiliar with real estate investing.
So low experience and a lot of information required, right?
Yeah.
A lot of training required.
And so this could be like, family, friend, like kind of family, friends, and network. And then, maybe others you're pulling through advertising, that kind of thing.
Okay, good. Very, very good start. Let's go down the rabbit hole together, shall we? My experience has led me to believe that the reason we don't succeed on things is because the input does not equal the requested output. So I believe that there's a pretty linear path to raising money. And what I think happens oftentimes is we don't necessarily have enough of the milestones organized in the money raising funnel. So like step 1, step 2, step 3. And so we kind of have is this disjointed funnel. Like we kind of have this one, and then we do this thing here, and then we do this thing here. And we're hoping to arrive at this location, but it's quite clunky because these different milestones, I think, are disconnected or disjointed. So let's explain what some of those milestones or elements are in raising money. So first would be, in your explanation here, which one actually is your desired audience? A or B? Would you say you prefer the accredited or you prefer the unaccredited? Sorry, James is muted again. Let's unmute James. Yes. Let's keep James unmuted. He's a person of interest here today.
Sorry, I muted myself. I got a talkative little guy here.
Oh, that's okay.
Definitely.
Hey, buddy.
Say hi, Jack.
Hey, Jack. How you doing, buddy? Good. All right. Nice to have you.
Definitely accredited investor. I think this is, faster to getting, the investment that we're looking for.
Okay, so that opens up the next level of dialogue. Good. So this is going to be layers to this. And so if we're looking for the accredited investor, then, okay, if we want to fill that, let's look at the obvious problems. Number one, where is the list of accredited investors? Where do they live?
That's a question for me.
Yeah, of course. Yeah, for you.
Yep.
And anybody else who wants to comment in the comments. So if we're talking about accredited, okay, where do those people live?
I mean, it's typically, well, yeah, it can be higher net worth individuals.
That's what accredited means, yes. But where do they live? Where do they hang out? Where are these people?
Like real estate groups. There's some in our community.
I got different answers in the chat. I got investor meetups. I got masterminds. I got the beach. I got golf courses. I got mansions, right? I see all kinds of stuff. And so I don't have the answer necessarily just yet, but I have the same question you do. And my question is, if we want to create a funnel and we want to get people down to our conversion point.
Are you Howard?
Yep, I am. I am. That's me.
Okay.
That's right. Relax, Natalia. Relax. I have many names.
The guy who
Okay.
said no?
I'm the guy with the hat. Yeah, you want to see my face real quick? Look at my face. Watch this. This is the guy that I am. Ready? You ready? 3, 2, 1. Here's me. Ready?
Oh, yeah.
All
I
right.
think he's
there
asking
we
about
go.
Yuval. Yuval, you're at home?
Yes, Yuval's at home with the red humble hat. There we go. Yuval is my partner in crime. Yes. Him and Caleb Komet, they look like Mario and Luigi with the red and the green hat. Yeah, I want to see your face too. Very nice. Very nice.
Right.
Great job, buddy. Great job, buddy. Okay. So, yes.
We got a plan. We got a plan.
The first question is where? Yeah, where are these people? Where are they? What are they doing? Now, I have some expectations or some beliefs about these people. Here's my belief is that I think these accredited people, if that's who we're targeting, they don't have a lot of time, frankly, that they are willing to invest. And so because they don't have a lot of time, I feel that most of these people are probably working through some type of broker designed to save them time. If we're truly talking about accredited people, why would an accredited person who has millions of dollars be sitting in a Facebook group randomly trying to make friends if they have money? Does that make sense, everybody? I think it is a disconnect for us to believe that somehow rich people have a bunch of free time and they're looking for you. I don't think rich people are looking for you. I think rich people are looking to hang out with other rich people. That's just the nature, right, of things. Like they want to be in a rich environment. So the idea that I'm going to find accredited investors sitting on Facebook 8 hours a day, I don't think is likely. I think the people who sit on Facebook all day are the non-accredited people who are hoping to, well, I'll put it this way. People who are not accredited, they like to spend time. And I believe that people who are accredited, they want to spend money. That's what I believe. I think people who have money are more willing to spend money to solve problems. And people who don't have money are willing to spend time to try to solve problems. So for me to spend money, that means I'm just going to call a broker and let that guy find me people to invest with. So mortgage brokers often do have accredited lenders. And they do have those lenders because a mortgage broker is a time saver. Okay. Let's talk about accredited time savers. Brokers, I think, are definitely one of them.
My plan.
I think another one other than brokers is going to be referrals. Like for accredited people, if their friend is investing, they also want to invest. One of my lenders, we've done quite a bit of business together. He has referred at least 4, if not 5 other people who all of them were also accredited as well, by the way, including his lawyer, right? And so it's like brokers is one, Referrals is number 2. Will an accredited person be sitting on Facebook? Maybe for a short period of time. But what they're really looking for is, as far as I'm concerned, every accredited person I know, they want to skip the line. Nobody with money wants to sit at the back of the room. Nobody with money wants to be at the back of the, let's call it the roller coaster ride. You know, they want to be at the front. They want to get the backstage pass. They want to get the shortcut. They want to get the answer. Money equals saving time. So I think one of the challenges we're having is that we're like, I want to get accredited investors to our thing. Okay, well, what are we doing to attract them? Well, I made a post on my social media. Well, unless you have accredited investors who follow you explicitly and you have built a large following of accredited investors, why would we believe that we're going to post on social media and accredited investors will just see our content? Yeah. Does that make sense? If anything, Rianka's right. It's their brokers sitting on social media. And the reason they're called brokers is because they're broker than you. That's why we call them brokers. They have less money than the people they work for. Right? They didn't call them richers. They didn't call them wealthiers. They call them brokers. Like, I'm a real estate broker. Yeah, we know. We know you're a broker than the client you serve. I'm a mortgage broker. We know. It's obvious. Look at your car. I know you're a broker. Like, that's fine. You can be a broker. You can be, I'm okay with that. But we're like, I'm afraid a real estate broker will yell at me. Why? He's broker than you. Like, if I'm Natalia on this call, who's uber rich, she just doesn't tell anybody. And there's a broker who's like, Natalia, you shouldn't buy that house. And she'll be like, no zdrovia, you're poor. I'm not. Like, get out of my way. Okay. So it's like, I'm just joking, but broker. Yeah, they're broker. So I think, James, this is where the funnel breaks down. Like, that comes back to this disjointed funnel. And I wanted you guys to explain the problem, because if I explain the problem, some of you still won't hear me. But if James explains the problem, some of you will hear me for why you're having a hard time filling the funnel. So let's talk about that, James. Let's get James unmuted again. James, what could we do about it? Like, if we know that that's the issue, what are our options now in this dynamic?
So I think, key option is to get out there and network with, network with brokers, network with other, go to places where high net worth people go. I know Nick Kalika, he's out there doing cruises and meeting up with people like that. So I think there's certainly like kind of the ground game aspect of it.
Well, yes and no. I'm going to kind of be the devil's advocate. Do rich people go on cruises? Let's ask that question. Let's try in the chat. How many of you think a wealthy person is going to go on a cruise that is like $500 a week to be on a cruise ship? How many wealthy people do you know are going on cruises? How wealthy? Well, wealthy enough to be called accredited, which means you have at least $1 million net worth, or $1 million in assets outside of your home, by the way. So let's just say $1 million in assets outside of your primary residence. Do you guys think? Bernard is probably more correct. I don't think rich people go on cruises. I think poor people go on cruises.
Poor people go.
You're right. See, you're absolutely right. I think poor people and maybe middle class people, but I don't think it's rich people. I think rich people will, even accredited people. Like, let's not talk about yachts and jets. Like, those are ultra rich, but just regular rich. Okay. I think the ultra rich, or the regular rich, I should say, they're going to take a first class flight to a place like the Ritz-Carlton and, some place, and they're going to spend $800 to $1,000 a night, and they're going to go to a place they really like. They're going to go to Sedona and stay at the nice Four Seasons. Like, those people are accredited and have the money you're looking for. The guy who's $500 a week, like, I've seen cruise ships, nothing. There are so many people on most cruise ships. Most of them don't look like a rich environment. They look like a club and a buffet line.
No.
And that's been my experience. And the bedroom is the size of, a bathroom. And so I don't think it's cruises. That's just so you guys know. Okay. I think it's more of a private experience. Yeah. Yeah, they're running the cruise business. Okay, let's keep going, James. I know
Yeah.
James has all these ideas.
Face again.
This is a good debate. Let's go to the next one, James. How else do you think we can solve this?
So we're talking accredited?
Yeah, we're talking. Well, you said accredited. So if we're gonna go after accredited, or you can switch and go after unaccredited, like you got a couple options here.
Yeah, I mean, looking at unaccredited, I think, I mean, people like myself and Bernard as an example, coming from professional environments, there's a whole, we built up a network over years of people that do have, our professionals have good income and don't necessarily have any experience or education around real estate.
Mm-hmm.
So I think that's I think that's an avenue that's more valuable than kind of maybe family and friends.
Sure. Yeah, sure. Jeff says he's going to hang out in valet area at the restaurants. Or are you just going to pretend to be a fake valet, Jeff? Just parking people's cars? And crazy. You could just tip Jeff with RSPs. That's wild. Okay. Maybe go to real estate conferences. Yeah, looking for lenders. Okay, cool. Okay. So it's the where. I think we can all agree that rich people are not trying to invest time to figure stuff out. They are really trying to invest money, or they're trying to leverage people they know to get answers for stuff. Rich people don't really want to like investigate and go down the rabbit hole. Like as a general rule, I'm sure there's a couple of them that love to spend hours on topics like, investing my RSP money. But I think most people are just looking for answers, because why are they rich in the first place? I think rich people, outside of like I inherited money, if you made money, you probably most wealthy people are business owners, or they've been successful in their career. And their career usually is I went to secondary education career. So they're doctors, lawyers, engineers, people like that. And we could say those people have $1 million net worth. Like that's cool. And so if they're successful in their career, they're really good at that thing, but they're usually not very good at investing, because they've put a disproportionate amount of their time in their career than they have to like making money. And so, or managing money, I should say. So I think there's a category in between. Yes, I do think you can go and find wealthy people, but to find wealthy people, I think, James, will also cost you money. So I'll say it this way, because wealthy people, they spend money to get answers. If you want to find wealthy people, I think you also have to spend money to find wealthy people. I don't think you're going to find wealthy people for free. For example, somebody said masterminds. Yes, in masterminds, you will find business owners who are net worth millionaires, but everybody in that mastermind has spent the 40, 50, 60 grand. Like I invested 100,000 in one of my groups so that I could be in a room with other 7, 8-figure entrepreneurs. And so that's true. But in that room, we have experienced business owners who have a whole bunch of money. And then you have other new business owners who had just enough to get into the mastermind. That is the case for all masterminds, by the way. I was in another mastermind where I paid $90,000 to be in that room. And yes, indeed, there are people who are actually wealthy in those groups. And those are usually, again, business owners. That's one thing. Another way you can do this is like, how do you spend money? The other way I would really advise you guys is this: spend money on things like LinkedIn ads if you're looking for the people who are career rich, like they've been a doctor for 20 years or an engineer, or they work in software sales or something like that. You'll find these people on LinkedIn. Like if I looked at somebody in this community, like I'll just pick on someone here, somebody who I think is a successful guy would be Ron. Ron is a very successful guy. He's done great things. He's awesome. He's a great human, but also successful in his career. Well, Ron is probably on LinkedIn. I don't know. I'm just assuming, Ron. Am I right or wrong? Are you on LinkedIn? Okay. Ron is on LinkedIn. There we go. Let's get Ron to unmute real quick.
Yes, Ben and I'm there. Yeah. So you'll probably learn me more in LinkedIn than in Facebook.
There you go. And so there's a clear indicator for all of us, right? Like, but to find Ron on LinkedIn, you probably have to do LinkedIn ads or something more aggressive to find these people and then have conversations and move from there. because the career successful people, like they didn't start off with money, but over time they saved it and they also invested it. And so they put money in stocks, they put money in real estate. And so they have a couple $1 million or 10 million or 2 million or whatever. And they are ready to do a deal as so long as the deal makes sense for them. And so they had to make a pretty good return. And the way to get money from like accredited people is that they really care about they really do care about getting a better return, unless they've had market volatility. I'll tell you what I mean. In the last, year or so, the stock market's done pretty good. Like there's people in this room where you guys don't want to private lend because the stock market's done pretty good for you. And so you can't justify, right? Let's call it what it is. I just sent all of you a text like in the last week. Do you want to be a lender? Who got my text? If your hand's not up, you're getting another one today. And so if you're too lazy to respond, I'm going to keep hitting you. And yes, it's me every single time because I want to know. I want to know who's interested. That is Ben. You guys are like, is this Ben? Yes, it is Ben. I'm looking at every message. I'm responding to every message. Okay. So the stock market does well. People don't want to sell their stocks. At the same respect, when the stock market does poorly, people also don't want to sell their stocks. So unfortunately, when the stock market is really high or really low, it's two negative reasons why people don't want to sell them, right? And so that makes sense. And so if the stock market is just not performing at that season, that's usually when people are happy to go from stocks to other assets, right? So like, hey, I've made some money. I don't really believe the stock market's going to double again. Like, was it last year? Like you guys are up like 24%. And somebody's like, I'm up 24%. And I'm like, I mean, forget private mortgages. You just keep doing stocks. Like if you're making 24%, rock and roll, go for it, right? So accredited people, wealthy people, I think, James, are really focused on growing their wealth as a sport. They don't need the money, but it's a sport, right? How many of you would agree with that? Like, it's just fun to grow your money. You wake up one day, you're up 12 grand in the stock market today. You're up like, I have the same things you guys have. I'm looking at my investments every single day. In fact, it's the first thing I open up in the morning. I'm just like, ooh, investments. So good. I'm up 45,000 today. Ooh, right? Or I'm down 20,000 today. Whoa, right? Whatever it is, you're ooh or oh, it doesn't matter. You're up or you're down. So that's one dynamic of wealthy people. The good thing about wealthy people, James, is that they do typically have real estate and they have a lot of equity, usually. Because wealthy people are relatively conservative with their primary assets, like their house. And so they typically have their house paid off or close to it. It's not likely a wealthy person has tremendous amount of debt on their primary residence. Because the simple answer is they don't have to. They can play the sport of making, like investing their money with like their surplus. They don't need their primary, like their home is not necessarily the primary or only asset in their world. They have a house and they might also have $1 million in stocks. Okay. It just is what it is. So that's the game with wealthy people. All right. So again, let's go back to it, James. If you have to spend money, what are some ideas for finding them? I guess that's the first part. What are some ideas for finding wealthy people other than spending ads on LinkedIn, which we've just talked about?
Yeah, I mean that was the first place I was going to go is ads. We've already kind of talked about going to like participating in masterminds and stuff like that.
Mm-hmm.
Um,
Natalia has a good one, which is like the original mastermind. She's saying live in the right neighborhood. It's an interesting idea, right? Just live in the right neighborhood, and your neighbors, if they're accredited, it's much, much easier to have that conversation with. Now, I don't know about you guys. I'm a little weird, Natalia. I don't actually like to talk to my neighbors about money. Oh, actually, I should say this. I don't like to talk to my neighbors at all. I'm usually the millionaire next door in all my neighborhoods. And so, like if all of a sudden, like now my neighbor needs to borrow my lawnmower because he knows I'm rich and I don't need it back. It's like, I don't know. You want to borrow a cup of sugar? Nah, really. I just go to the store and get my own sugar. And so, yeah, you can live in the right neighborhoods. I think in like more of the like exclusive communities. Like, I went to my buddy's house a little while ago. He lives here in North Scottsdale. And so the cheapest house is the one he bought, which is $4.5 million. And so we go into this gated community, and it's like 2 gates plus a guard plus like dogs, like it's like the full thing. Like, in Arizona, that's how you know you're rich. Like, it's levels of gates, right? You have 1 gate, like whatever, you're still poor. You have a gate with a guard, you're doing better. You have 2 gates with dogs, and like you're more high level. Well, you pull into this thing, and the whole thing is green. Like, the whole neighborhood is super green. It feels like you're in Beverly Hills. Everyone has these massive hedges, and we're in the desert, right? So you guys understand the cost of keeping things green over here. And this is real green, not the fake stuff we put in the rental properties, where the dogs pee. Like the real green, like grass. Like, in Arizona, grass is rich. In Canada, everybody has grass. But over here is anyways, you go to Buddy's house, everything's super green. There's these little play areas, there's kids around, whatever. He's like, yeah, my house is the cheapest house. It's $4.5 million. He's like, he's 12, he's 30, he's 14, whatever, right? And so in that neighborhood, probably go to the park. If you don't have a dog, get a dog, and make sure your dogs make friends with other dogs. You know how that works.
Invest in a dog.
Invest in the dog. Yeah, you just get a dog, get a nice little cute dog. Don't get an ugly dog, and you can probably raise some money just with dogs.
Okay. Is that a tax write-off then?
Yes, of course. Yeah.
Yeah.
Yeah, of course. Yeah. Jay has a good point. Privacy is also important. And so that's the other thing too with Facebook, guys, is like, are people who are wealthy really trying to, other than like real estate investors, business owners, and like people who really crave fame, a lot of wealthy people aren't trying to be famous. You guys get it. That, like, the anonymity and the privacy that it affords to be wealthy is actually a very attractive feature for the wealthy. So other than like Grant Cardone and people who use social media to become wealthy, or if they have an impact business, like we do, which is reaching a lot of people, they're not really trying to be public. They want to have all their affairs in private, the good affairs and the bad ones, like they want everything to be private. That's kind of something afforded to you when you're wealthy. You get to have a bigger house with more acreage and a more secluded area, and people don't bother you, and there's no solicitation on your neighborhood. And it's like the whole idea is you're not bothered. You just kind of live your life in quiet. So I think part of the issue, James, is privacy, which is why if you use a referral network, I actually think it's better. Like when I've had accredited or wealthy people come to my webinars or stuff, it's been through usually recommendation by another wealthy person. Now, you get people who are the in-between wealthy and in-between. Like, I think the career wealthy people, James, are very accessible. I'm an engineer. Right. I've been at it for 25 years. I have 3 million. My house is worth 2 million. It's gone up in value. I bought it when it was 600,000. I think those people, James, are very accessible. The like right. $1 to $3 million net worth people. Okay. Yep. I think the, $5 to $10 million net people are harder to reach through those channels.
That makes sense. Yeah.
Okay. So, okay, let's keep going to the next component. So number 1 is you got to find the accredited people. Number 2, if they're accredited, here's the next part of it. When they see your post, your ad, your something, what is the message that you are conveying?
So I think it's important to convey that, we've got low risk. Well, number 1, we're credible. We've got a low risk avenue on where to put their money that is securely backed by real estate. But basically we have a straightforward, simple method of helping them grow their money that is secure.
Okay. And so when you say credible, what is it in your messaging? When you make content or make a post, what is it in your messaging that says credible?
Got experience in real estate, experience in helping people grow their money.
Okay.
Understand the market, understand yeah, how to use real estate as a tool or a medium to grow wealth.
Okay. So if we're going to go back to the idea that they use money to get answers and they see you guys on social media, they already have a financial advisor. That's going to be the question I have, which is what sets us apart from their financial advisor? Think about that, right?
You gotta do.
They have someone who's probably already telling them where to invest their money. And so when I encounter wealthy people, it's usually me against the financial advisor. Because their financial advisor or money manager has their money locked up in some account somewhere, and they're advising them on how to invest it. And so when I meet them, like I got a couple farmers in my world who are quite wealthy, okay, Canadian farmers. And it was like, well, you got to talk to my money manager because he doesn't understand your strategy. And I'm like, how could he understand my strategy? He's had your money in an index fund making 3% or a CD making you 2% for the last 10 years. Why would he understand real estate? Because their financial advisor is, there's like this perception that financial advisors are safer, but nobody talks about the fees they take out of your wallet. And so at the end of the day, it could be safer because they put your money into really super low risk, but then after they charge you all the fees, it's also super low return. That's the financial advisor world. And so you're competing with financial advisors. It's kind of like this is the dynamic. When you talk to wealthy people, you compete with financial advisors. When you talk to not wealthy people, you compete with their friends and family's free advice. Does that make sense? The dynamic? How many of you get that, right? Wealthy people have advisors. Broke people have family and friends that also advise them. You know, right? That's why I don't tell a lot of people I'm rich. I don't want free advice. You know, I get some kid from high school. Remember me from high school? All right, cool. I heard you got real estate. Yep. Oh, you should invest in my business. What's your business? Oh, I cut dog's hair. No, thanks. I'm good. Thanks anyways. You know? Yeah, unsolicited advice givers. That's correct. That's correct. I think we lost James. Let's keep going here. I'm going to add Bernard into the mix here for a second. And then we got Shelly and others who have also gone through money raising webinars. Let's go and poke at Bernard for a second. Bernard, what's your experience with the same question, getting people to come to the webinar?
Yeah, I mean, I think it's great that we have this forum to do the webinars. I know I'm going to be up to bats in a couple of minutes. I guess for me, my experience is, we do get people that are interested to learn more and see if they could partner up. But I guess, the investable assets that they have available isn't sufficient enough to fund the deals that I'm getting in the market that I'm choosing, which as you know, is the Niagara region. Where it's like $300,000 to $600,000. So while I am getting, some interested private lenders, when we do the discovery call, they may have 50, 100, 150,000. And I don't necessarily want to maybe have like 5 people on the mortgage because, I might have to incur and shoulder the legal cost because that's kind of like what I offer to my private lenders. So again, this is my experience that I am getting some private lenders. It's just I'm not getting ones that have sufficient enough to pay off to lend the entire deal.
Okay, so you're on the other side. You are on the unaccredited investor side where people don't have $1 million. They have maybe 50 grand or 100 grand to do something, but for you, it's not adequate to put on a first mortgage. And so it's not enough for you to be able to complete a deal. Is that the case?
Yeah.
Okay. And it doesn't make sense to have 5 people on one mortgage if everybody has 50,000 because you're going to incur legal fees on 5 people unless they put their money in a corporation together or some kind of syndication deal. It's just a lot of extra work to get 5 people on one deal.
Correct.
Okay. So what do you guys think is better? Accredited or non-accredited? Who do you think is the right avatar for private lending? Put it in the chats if you can. Bernard makes a good point. If we go after the super wealthy, they spend money to get answers. If we go after people who don't have money, they all want to do the deal, but it's not the answer, right, Bernard? It's more complicated. It's difficult. Okay. Mel says accredited. Annie says accredited. Okay. Now, I believe there's a category of people in between. Yep, Natalia, in between. That are, they have capital, they have resources, they have equity. They may or may not be accredited, but they have way more resources than kind of the average person to do deals with. But let's go to the second part of this conversation. So once you have the idea of who you want to talk to, then the second thing is going to be, how are you communicating? Now, here's what I've learned about investors. If you go after people who are unaccredited, low experience, to that same point, yes, you have to give them more knowledge and training in the area of private mortgages because they don't know anything about it. And they don't have an expert in their world who will teach them. They don't have a money manager person. And so there's nothing wrong with teaching people, but it's important that when we're teaching people, we have to have clarity around our strategy, probably to the same level that a broker or a money person would have clarity around their strategy. You're competing with other opportunities in both worlds. So at the world where you have, whether it's accredited or unaccredited, I think it's very important that we remember that this is a money conversation. And so the money part needs to be very clear. I think if you're asking people for favors, like you want to do money raising, but your approach is like, hey guys, I want a favor. I'm looking to borrow money. Well, that's not a deal. That's not a business. I don't think that that's going to help you in the long run. In fact, it's going to sour your reputation. So I think you have to come prepared like you're about to win a spelling bee. Like you should know all of the questions that are going to get asked within reason. And you should have taken the time to make a professional presentation of your deal where someone can ask you hard questions and you'll have good answers. Now, I think that's true, whether that's a webinar or whether you're one-on-one at Tim Hortons with a prospect. Because I do actually believe you have one chance to impress a lender. I don't think a lender is going to give you a second chance if you came unprepared to the first webinar. So part of the thing I see, guys, is this idea of credibility. I don't know if we have great answers for common questions. And let's talk about that for a second. So if somebody says to you, is this a risky deal? What they're really saying is, did you do the homework to give me factual information that would show to me logically that this is a low risk transaction? Like you would say something like, well, I've analyzed all the properties that were sold. And by the way, I do mean all of them. I don't mean 2 comps that you got from your realtor. This to me is the area of laziness that we get stuck in. I haphazardly reached out to one realtor. They gave me 2 comparables. That 2 comparables is the total data set that I have. And so that's all I'm going to talk about to an uninformed lender. When that lender says to you, are there only 2 houses that sold in the area? You're going to say, that's all the information I have, which makes you look very uncredible. Or you're going to say, I was too lazy to get another realtor to send me the corresponding data. It's A or B. If I'm going to present data and value is like the most important thing, the value of something, I'm going to go to extremes to get all of the data points and really formulate a thesis. If you don't do that, then I think it's a lazy approach. And so you're asking for a lot of trust from someone when you weren't willing to put the work in to show a lot of proof. And so I think with borrowing money or doing deals, if you want trust, don't ask for trust before you offer proof. Give all the data, show all of the comparables. Like say, I've taken the time to get all the comparables, I've organized them, I put them on a map. I have highlighted which ones I think are the most appropriate, and this is why these 3 comparables are the best comparables. Now, there's 30 comparables in the area over the last year and a half, and this is why. Here's my thesis. This number, this number, this number, okay? And based on that, I believe the value is X. Then a reasonable lender could say, okay, like again, a lender isn't like, not all lenders are inexperienced. Some of them have bought real estate before, they flipped their own properties. And that's the next category of lender. What we call this the investor lender. They've already bought real estate. They've already invested in property. Like Shelly and Eugene could be an investor lender. They have already a building. They've already owned many units for many years. They know real estate quite well. And so if Shelly and Eugene were willing to get a HELOC on their apartment building and lend it to you to do a deal, you know, that would be an investor lender. But Eugene will ask you questions like, can you explain to me the value and how you got there? Can you explain to me what you're going to do if you rent the property out? Can you explain to me what will happen in a downturn market? Can you tell me what is your second exit? The investor lender is much more informed. And so, like, if you want to work with people who are in the investor lender category, they're not looking to just invest money they have. They're looking to grow what they have. And so people who want to grow, what you're competing with is their own deals. So, for example, if Natalia is going to do a deal, she already owns real estate. If Natalia is going to do a deal, I'd be competing with her own deals that she's doing for herself. And she might say, no, I'm buying my own property. And so I believe I can make 15% return on my own deal. Why would I give you my money at 8%? That wouldn't make sense to her. And so that's the other thing with investor lenders is that they have opportunities. And so, yeah, I do think it's important that we bring a high level of integrity to the data. Like, if I want $100,000 from Natalia, I should be prepared to spend an hour or 2 hours getting all of the corresponding information so that when inevitably she has questions, I can be prepared to answer them. I'll give you guys a pro tip. You should know what occupation your private lenders have. And you should also know what personality type they have. If your lender is anything in the financial realm, accountant, CPA, analyst, treasury manager, works for the CRA, even bookkeeper, if your lender is anything in the financial realm, they will not accept any kind of intangible financial answers. Why would they? All they do is crunch numbers all day, right? And so the only way for them to assess risk is numbers. If you're like, is this a safe deal? And you're like, oh yeah, it's in a good part of town. There's a Burger King around the corner. And I went walking one day and it was sunny. And so I felt safe. And so this is a safe neighborhood, right? And Natalia's going to go, that's not what I meant. Right? She's going to say, give me some detailed information to explain why it's safe versus like, it was sunny. Bernard, what's your take on that? You've obviously done a number of webinars and stuff. How is that sitting with you, or how is this dialogue sitting with you for the benefit of everybody in the room?
Yeah, no, I definitely am aligned with what you're saying about people in the financial industry. Me being one of them. We were taught a certain different way, and anything that is unknown is too risky. So they want to go to what's known. And since a lot of these banks and fund companies spend a lot of marketing and a bunch of like an army of people to just keep on telling you what it is, you have that kind of perception that I'm just going to go to a bank, safer.
Okay.
While that, there is different opportunities, we always, people say, don't put your eggs in one basket. Like, I try to do an approach where, keep your mutual fund and stock trading account and things like that. But why don't we put like a certain percentage of your portfolio into something like this? And then you could see that it'll prove out that you could also get similar returns or even higher returns in those riskier type investments, such as equities, like stocks, things like that. But now you have at least the safety of security of a collateral charge, i.e. like it's secured by an asset, real estate asset.
Okay, good. Let's go to the next part of this. So Part of the challenge was, how do I get people to my webinar? And so that has to do with your communication, has to do with your credibility. If you want to create more credibility and you want people to get to know you in advance, that is a really good way of building up that likability trust factor. So part of what you can do when you have a webinar is, instead of waiting until the webinar for people to get to know you, you can put some groundwork in before the webinar. And so if you're running a webinar and you are running the landing page, you could generate emails in advance that says, hey, it's Bernard. Thanks for signing up for my webinar. And this is what you can expect to understand during the webinar. This is who I am. This is what I'm doing. I'll see you tomorrow on tomorrow's email. And so you can use the emails before the webinar as a way to warm up the audience. That's one way to do that. That's super helpful. I think it makes sense for us to do. The second thing we can do is, if people find you for the first time, and let's just say they want to go to Bernard's webinar, they might just go to Bernard's Facebook first, and they're going to be on Bernard's Facebook and say, all right, well, what is Bernard all about? And so you have an opportunity on your Facebook feed, on your LinkedIn feed, on your bio, on your Instagram feed. You have an opportunity to basically create a story and give people clarity about who you are and what you want. I think it's actually quite helpful, in fact. How many of you, if you meet somebody new, you just Google them or Facebook them and you just kind of like research them a bit and you find out, like, do I like this person? Great. All right. If you haven't taken the time to do that, then I think you're missing an opportunity for people to get to know you before they know you. Because if you do that and then they go to your Facebook and they read and consume some of your materials, by the time they come to you, they're more like confirming what they believe about you versus learning brand new something about you. I think people need to consume your content. So a webinar is good from the perspective that they'll have an hour with you or whatever to get to know you, and you share your story and share your deals. But it'd be way more valuable if you allowed people on their own terms to go and consume your content and get to know you. And so that's what your content should do for you. I don't think the content is as much about reaching people, especially if we go back to James' point about wealthy people. I don't think your free content, unless you're literally going to be an influencer and have thousands and thousands of followers, I don't think your free content is actually going to reach a lot of accredited or even unaccredited investors. Not the way the algorithm is designed. Facebook's not going to reward you because today you woke up and decided to make content for the first time. They don't care. If you're not a regular contributor, if you don't have a growing audience, like Caleb is doing content on a regular basis. And so Caleb has the higher propensity of pulling in lenders because he's very consistent with his content creation. And so people will see that, they'll notice him, they'll see him over and over again, called impressions. And when he finally says, hey guys, I'm doing a webinar, now those impressions could transfer into leads generated for his webinar. But if you don't do content on a regular basis, then the best chance you have is when you post content, it's nothing more than a storyboard that tells who you are and what you do. And so you guys could probably go and spend a bunch of time this week, make 20 videos, post all of them on your Instagram, and then don't make any more videos for a while. Does that make sense? Because people will just go and consume those 20 videos. Now, okay, who you are, what you do, why you do it, what your journey is. Talk about your business, talk about your life a bit. Okay. Does that make sense? So content is helpful from a standpoint that people have a place to really see what you're all about. If you have credibility pieces, like you bought a lot of properties or you've been doing the business for a while, or Shelly could say been a realtor for 10 plus years, stuff like that, again, you could put that on your content because I think it'll help people go, oh yeah, that person is real, they're credible. It's a really bad sign if someone goes to consume your content and you have nothing, because then they just don't know. In the case where you're trying to do a webinar, okay, nothing. All right, let's go with Mel. Mel has a question or thought.
Hey Ben, how are you?
Hey, good, Mel. How you doing, buddy?
Good, good. Okay, so for me, I have a question regarding this content because I'm trying to build my confidence in, especially with the real estate. I'm because I'm active in social media for our pharmacy business, And I tried doing like posting some of this, and one of the friend who's willing to get into investing messaged me and, oh, I'm interested in what you do, and I have something that I would like to invest. And then I said that, okay, send me your phone number, we'll have a chat. And then yeah, so tonight we'll have a one-on-one. So in that case, how do I approach it in terms of gathering information or providing information about real estate? Should I ask him about his goals and his, like, how much you think you can lend as a starting discussion for this real estate, or just carry on or get as much information and then kind of put it in my lending buy box or lending box or pipeline?
Okay. So to qualify somebody, I would start with the bluff, the bottom line up front. In your case, I would say, so I already own a couple properties. We've been investing in the Nanaimo region for a while. And so we have decided to expand our real estate holdings. We are now also actively seeking deals in Regina and Nanaimo. We have hired our team to grow our deal finding part of our business. And so we are every single day actively looking for deal opportunities. For me to better understand if what we do would be a good fit for you, I would like to know a few questions from you, bottom line up front, and then literally ask them all the stuff you just said. So what kind of, how much capital do you have? What kind of rate of return would you be looking for? How soon would you like to do an investment? What are the concerns you would have if you did do an investment? Are you only looking to keep it in BC, or are you flexible to look in other provinces? And so now you can bombard them with questions, and you don't have to give any more context because you've already given the clarity on the front end. That's what I prefer. I prefer all of you take that approach, telling them, this is what I'm doing. I'm actively looking for deals. I'm expanding, and I'm looking for deals every day. I'm actually part of a real estate community that we're actively working. And so I'm looking for the next great opportunity. And yes, I will be partnering with private lenders to make it happen. So let me ask you a few questions to see if this could be a good fit.
Okay.
You qualify them. Don't let them qualify you.
Okay.
Does that make sense?
Yeah. Yes.
Although, and if you don't do it that way, Mel, now they're going to ask you a dozen questions, and you'll be on the defensive end, not on the offensive end.
Okay. Yes, because what happened is I started doing the content just for me to build confidence, and one of our friends posted something like, "Oh, I'm interested in what you do, and what is it about?" And I said okay, can we have a chat? Send me your information. I sent you a direct message, and so far it looks like an effective way, especially if within your network they are also in the process of really investing and putting something. So now we have a quick meeting tonight, which is good.
Mel's going to raise millions of dollars without even trying. This is crazy. Mel's like, I made a video one time and my rich friend said, I want to invest with you. Didn't you tell me the same story last week? Like one of your cousins or somebody from the US also wanting to invest with you guys. Isn't that also you?
Well, it's Kristen's aunt. So
yeah, you guys have all these rich aunts and rich uncles and rich friends. And so people are like, how do I raise money? Ask Mel. He's obviously rich. Mel is just out in BC. He's like the, real estate playboy out there. Everybody knows him. He runs the basketball meetups. Like Mel is running basketball tournaments over there, right, Mel? Aren't you doing all that?
I'm just a committee on fundraising. I enjoy doing or getting into groups for organizing, and so far, it's for me. It's also building credibility, and although I think when we started first for our pharmacy business, I have started that, but I kind of stepped back, and now with the real estate business, I think it's an effective strategy for me to go back and connect. And from there, the network will grow. And
I would say,
think-
Mel, that seriously speaking, you are the most actually credible person here. Like Mel is exactly who he says he is, has never exaggerated himself, is very, very capable, is very honest, and he's super wealthy. So Mel is
No,
the most
I'm not.
credible
I'm not
person
wealthy.
we have. And he's the guy giving back to the community, doing the basketball tournaments and doing all the. Mel is literally doing the perfect thing. Mel, you are like the Robin Hood of real estate for the Kapabayan people. That's you. You are the Robin Hood of the Filipino people. And so, yes, who agrees with that? Mel is literally the most credible person here. I think so. Yeah. So Mel, you are already very, very credible. And so this is why you're going to do very good and special things for your community. And I think you raising money is a piece of cake because you are so naively good at raising money. It just smells like all I did was go to the basketball tournament. Somebody wanted to give me $1 million. Like, okay, sick. Right? Like if that was the case, all of a sudden Gab's going to be out there with basketball shorts on, just doing drills at the local YMCA.
Yeah. Okay. Thank you.
You're welcome. You're welcome. You're welcome. Yeah, exactly. Exactly. That's Mel. Great job, Mel. Great job. Glad to have you. Well, Bernard, we're in a good spot here, guys. I want Bernard's going to put together right now, he's going to walk us through his business and share with what's going on in his world. And he's got a presentation ready for us that he's going to share his business and some opportunities he's working on. So, Bernard, are you ready to take it away?
Yes, I am, Ben. Thank you so much.
Okay. Guys, give it up for Bernard and Valerie, rock stars.